there's been a huge amount of layoffs from Google, Facebook, Microsoft, and Amazon, and a market collapse coming closer and closer every day. Fortunately, the famous author of the best-selling book Rich Dad, Poor Dad and personal finance expert Robert Kiyosaki has some expert tips that can help you make the best investment choices, so you both understand the warning and take the best steps to secure your financial future. Over the last few years, the warnings that Robert Kiyosaki has given were all about preparing for a market crash. However, more recently, he's now saying it's imminent. He believes that the current situation is totally unstable, and now the crash is completely inevitable. The recent situations in 2023 have given him more than enough reason to say this.
Especially today, because, look, we're crashing, like it or not. The question is, how will you survive it?
I want to say is this, it's the biggest opportunity in the history of the world. This crash is going to be so big, and look at that red board again. I don't think any more quantitative easing can start it. Even if they solve the coronavirus crisis, it's still going to crash.
When Kiyosaki was asked by his followers what could be more severe than a Great Depression, he answered that a global recession would be worse. When looking at it, it becomes more clear because the first signs are showing up. Namely, that Silicon Valley Bank in 2022 laid off 144,000 people, then another 66,000 following the eventual bankruptcy just recently. He continued saying that Stansberry's research was seeing some huge deterioration in the near future. This prompted Robert to warn investors that almost all assets will drop, which means it's a good time to invest in gold, silver, and Bitcoin as safe haven assets. Even though the economic downturn will definitely be tough, it's best to be patient and see it through. This makes matters worse, however. There are rising rates of bankruptcy and homelessness, but fortunately, there's good news. There are going to be plenty of assets in the safe haven commodities, such as gold, silver, and Bitcoin. At this point, you might be wondering how Kiyosaki knows that these three asset choices will be a good place to put your money. Well, if you've looked at these commodity prices, gold and silver have been on the rise, which he uses as an argument to prove his point. It shows that prices are deteriorating, which is a result of the American poor and middle class struggling to make ends meet and falling deeper into bad debt. In fact, the famous author told his 2.4 million Twitter followers that there's no need to panic. He went as far to say that it's actually great news, because you can already start to grow richer with as little as $16 to buy yourself a single silver coin.
The reason I call it God's money is you can't fake it. You know, you can fake it with a fake ETF, like a gold ETF or a silver, which I don't touch because it smells as bad as the guys that printed that crap. You know what I mean? Jesus. But this is real money. So you look at this here. When I first started buying that was $1.40.
Yeah.
Today, that's $16.
Kiyosaki has already made it clear that he plans to buy much more gold, silver, and Bitcoin while the prices are still good because they hold real value. The truth is that paper money has a major downside that we're seeing. At this point, the Federal Reserve has to print billions just to support markets and economic growth. But that means a higher debt and depreciating dollar, which is never good for the economy. To make this complicated subject easier to understand, and to prepare yourself for the recession, I'm going to share the top 6 factors that contribute to a global recession according to Kiyosaki. Number 1. Debt. Robert believes that one of the major reasons that economies are struggling is because of their massive debt. He argues that individuals and governments have taken on way too much debt, and it's putting economies in a place to collapse. The problem that comes with debt is when individuals, companies, or even whole governments simply can't pay back what they owe. When this happens, banks start piling on the heavy losses, which leads them to be much harsher with who can take a loan. This ultimately leads to people spending less due to the difficulty in accessing money, and finally to a lack of economic growth and usually an economic decline. This is exactly what happened in the economic recession in 2008. What you can do, according to Robert, is to reduce your debt as much as possible and start storing up your cash reserves. He believes that having cash will allow people to take advantage of the many opportunities that will present themselves during a market crash. Number 2. Inflation. Inflation is caused by a few factors. The first is a general increase in the price level of goods and services over a period of time. A decrease in the supply of those goods and services, or an increase in demand, leads to an increase in supply.
Thank you for sharing your time with me.
Inflation makes life harder.
That's right.
On the working class. You see, when Biden shut down the XL pipeline, what that did was create inflation. The first thing they do is increase the price of oil. When you increase the price of oil, you cause inflation. And when you cause inflation, thank you, Jesus, but I get richer. The rich get richer with inflation.
There's a good reason why Kiyosaki is concerned with the impact of inflation on the economy. If these rates continue to rise, it'll have major negative impacts as it's already shown. The current policies, low interest rates, and the quantitative easing that happens have led to even higher inflation, which has and will continue to reduce the value of investments. It also lowers the purchasing ability of consumers, which even further reduces debts. It also leads to higher interest rates, which is just another hit to the economy. This can quickly lead to a recession as countries fight to reduce inflation quickly, as we're seeing now. Number 3. Economic imbalances. There's a major gap between the rich and the poor, which just seems to get bigger. Robert finds this an area of concern, as this unequal distribution of resources leads to a lack of stability between these two groups and others dispersed within. As of right now, the economy favors the rich, and unfortunately, with a small group controlling the majority of wealth, consumer spending decreases mostly because people just have less access to money to spend. With lower consumer spending, businesses will get hit because they're selling less service, which continues downward, leading to a recession. To make matters more difficult, this inequality makes certain people have a difficult time getting access to education and the possibility of advancement in both their careers and financial situation. With a lack of consumers having the ability to grow and spend, the economy gets pushed down even further. Number 4. Unexpected circumstances. There are sometimes unexpected circumstances, like pandemics, natural disasters, geopolitical events, and other events that can negatively impact the flow of supply through the economy. One recent example is the COVID pandemic, which has reduced the flow of supply, which we're sure many of you remember. Many countries were put into quarantine, which pushed many businesses into bankruptcy and hit the tourism sector badly.
The coronavirus and the coming crash, financial collapse possibly, marks the end of the industrial age and the beginning of the information age. It's a very big move. And the people that are in trouble today are people still stuck in industrial age thoughts.
It also gave a clear insight into how weak our current healthcare system is, both nationally and internationally. Another case of unexpected circumstances is the Russia-Ukraine war. This is the major reason why oil prices have continued to skyrocket. Russia is one of the biggest exporters of both oil and natural gas to Europe, and most of it goes through Ukraine. However, when the war started, major sanctions were placed on Russia, causing a huge disruption to the output of oil to Europe and the US. This shortage is the reason why prices spiked, and as expected, getting us closer to the recession. Number 5. Failures of policies. At the end of the day, even the people in government are human, and humans make mistakes. So having poorly designed economic policies, corruption of these policies, or even just a suboptimal implementation of them happens. However, these can cause major problems in economic growth and lead to recession. It sometimes can start very small, even to just a local jurisdiction, but it can expand nationally and even internationally. It can take many forms as well, such as inadequate management of finances, weak fiscal management, or just ineffective trade policies. Another issue is a lack of investment in infrastructure and education for the people. The problem is not so much when they will happen if they persist. The longer these issues remain, the more damage they do. Over the short term, it creates uncertain situations and discourages investment, which means less economic growth. Over the long term, it creates a fundamental weakness in the economy that can have lasting negative effects. Some of these are low productivity, limited innovation, and unequal distribution of wealth. These weaknesses just set up the stage for an unexpected happening to easily topple the economy into a recession, as it's already just hanging by a thread. Number 6. Lack of financial literacy. You'll find that Robert Kiyosaki is a huge proponent of financial education. He believes that everyone should have a good understanding of how money operates and how to save and invest well.
I want to talk to you about the most important subject for all of us today, rich, young, poor, or old. It's called financial education. And as you know, our school systems teach us nothing about money. Nothing. It's pathetic. You know, they have financial literacy courses today. Well, that's not financial education. You know, it's really pathetic.
He argues that financial education needs to be implemented into the curriculums at school. In fact, he says this because he believes that a lack of education leads to a huge economic problem that are bound to stay with us until we change. For example, if people continue to remain uneducated, then they'll take debts on that they can't pay properly, which would lead to more bank failures and negatively impact the economy. Another instance of this is people making bad investment choices, which would lead to higher market volatility and potentially negatively impact both individuals and businesses. Now that you have a solid understanding of why and how recessions happen, you need to know what to do about it. Fortunately, Robert Kiyosaki has already shared 4 things that will change everything for you in this upcoming recession. But before we begin, it's important to know a few things. Firstly, economic downturns are a natural part of the economy's life cycle. Secondly, having an awareness of this means you can protect yourself. Thirdly, make sure you have taken these 4 practical steps to heart and always have a long-term mindset. Number 1. Grow an emergency fund. The first step Robert Kiyosaki recommends is to have a cash reserve of at least 6 months. This provides an ample margin of safety to protect against potential job loss, many of which will happen during the recession and any other issues that come up. There are a few things that you can do to help grow an emergency fund faster. Firstly, reduce your expenses by using whatever you can make extra sources of income through methods like a side hustle and downsizing your home. Having a cushion is vital for surviving in a recession, reducing stress, and having opportunities. Number 2, build financial literacy. Since schools won't teach you about finances, it's up to you to find the resources. In fact, a great place to start is with Kiyosaki's book, Rich Dad, Poor Dad. Learning about how money works and what to do with your own money will allow you to make sure that you are in the best possible position during an economic situation and make sure that you come out on top. Not just surviving, but rich. On top of that, never hesitate to get professional advice about your money. It's yours after all. Number 3, diversify your investments. Kiyosaki names 4 places to put your money: stocks, bonds, real estate, and commodities. He says this because it's the best way to minimize your losses. One sector may be hit hard during a crash, but if you spread your money in diverse assets, you won't be as impacted. For example, commodities tend to go up with inflation instead of down. It also pays to have real estate and dividend-paying stocks, as it provides ample cash flow regardless of how bad the economy is doing. Number 4, take advantage when opportunities pop up. Even in the worst situations, investment opportunities may arise. In these moments, you'll need both cash and a good mindset to act. Kiyosaki says that it's always better to be proactive and prepared as opposed to reactive. But to get to that, you need to be knowledgeable and informed. The way to do this is to study and make sure you're keeping up with the news so you know what's going on. Crashes are always going to happen at some point or another, and by building up cash reserves and investing in safe haven commodities like silver, you can protect yourself. If you want more valuable information like this and to stay safe during the recession, be sure to subscribe to the channel.